The company being analyzed today is Womancart Ltd. This is a retail company which focuses on women fashion. Today, we're going to analyze the company's financials, what it actually does, and its future growth rates to see if this is the next big thing. Now, first of all, we have the market cap of 195 crores. So it's a very, very small company. The number of shareholders are very small. So one person cannot buy one share. They need to buy a lot of shares of this company, okay? Mandated by law. So small cap 195 crores company, price to earnings ratio of 21.6, current price of one share 292, book value, that is the net assets, okay? Asset minus liabilities per share 115 rupees, return on equity of 17.3%, which is pretty nice, and return on capital employed ROCE of 18.3%, which is also pretty nice. Moving on to the profit and loss section. First, we have sales, operating profit, profit before tax. At the very bottom, net profit from 2023 all the way to 2025. So, in 2023, we had sales of 9.64 crores. In 2024, 29.21 crores. And finally, in 2025, 58.86 crores of sales, 9.93 crores of EBITDA, 16.8% EBITDA margin, and finally a profit after tax of 7.19 crores. So it's a small company, it's a profitable company. In the TTM, the previous 12 months, the sales have grown by a whopping 114%, profits have grown by 111%, so almost as fast as sales, and the return on equity has remained around 17%. Cash flows are not a company's strong suit. So now let us see what the company actually does. So, Womancart, aiming to be India's leading quick commerce destination and a global platform fulfilling every woman's lifestyle. So, quick commerce, okay, aiming to be India's leading quick commerce destination for women's lifestyle and fashion. Okay, lightning fast 2 hour delivery across Delhi, NCR, and Jaipur. So, some of the markets in which it has 2 hour delivery in, and some of the markets are Delhi, NCR, and Rajpur, offering everything from fashion, clothing to makeup, jewelry, crockery, and footwear. Crockery is something unique. I've never seen it before mentioned in companies' reports, but you see, we will see the revenue breakup in terms of category, and all of these are pretty important. So, wide variety of products catering to women's fashion. So, it's aiming to be a quick commerce company. Okay. Another aim is to be a one stop solution, a one company for all of women's needs. It has 12,000 SKUs, stock keeping units, which is basically all types of distinctive products. Okay, 15 plus stores and warehouses, and 8 of its own brands. Okay, 8 of its own brands. In first half of fiscal year 2026, which is quarter one plus quarter two, already produced sales of 49.8 crores with EBITDA margins of 22.2%, which is very high from fiscal year 2025, and profit after tax margins reached 10.7%. All right. Digital metrics 30.4 thousand followers. And you can see footwear, personal care, fragrance, jewelry, makeup and skincare. Crockery is also there, home and kitchen decor. All of these are being offered by Womancart. Their journey, okay, their journey, revenue growth of 14 times in 3 years. Now, you may not see these, it's a bit small. Let me just see if I can. Okay, in 2025, they entered the Australia market and they opened a large warehouse for their, what do you say, fast delivery. So here it's written they entered Australia market in fiscal year 2025. And these, what do you say, crosses? Yeah, these crosses, it's not a cross. What do you call this? Whatever I have drawn, I forgot what it's called. These are the home brands. So it launched home brands, its own brands in 2022. It launched its own brands in 2024. It has around eight in total home brands and basically a lot of growth, big growth. Then, in that time, it has shown growing profitability. As you can see, gross profit has shot up, EBITDA has also shot up, and profit after tax has also shot up. In the bottom, you will see this. These blocks are the profit after tax margins. So you can see from 5% in fiscal year 2021, reaching 10% in fiscal year 2024, 12% profit after tax margins in fiscal year 2020, whatever it is, 2025. Okay, and currently 11% in first half of fiscal year 2026. Profit after tax margin has actually increased. Same for EBITDA margin. 17% fiscal year 2025, 9% fiscal year 2023, and finally 22% in first half of fiscal year 2026. So the company has shown high growth, plus the profitability has grown even higher. Now let's talk about their business model. First, inventory-led fulfillment. Now, what does this mean? Womancart is not just a company acting like a connection between customers and original equipment manufacturers. All right. It's not like they are just connecting, they're just a e-commerce platform. What they do, according to them, they actually buy all the products. Of the products listed, they buy from the companies and they own the products in their own warehouses. So inventory led fulfillment. Inventory, the goods, led fulfillment. So they buy all of the goods. Okay. Efficient procurement from big OEM brands. OEM is original equipment manufacturers, buying from distributors, dealers. That is the first part of the business model, that they own all of their products, not just a platform connecting customers and manufacturers. Second is, where do they sell from? B2B, B2C, OEMs. You can either buy their products from their own website or other online websites, or you can buy it from their own stores, Womancart stores, Womancart Lux stores. I don't know what Lux means, but they have their own stores. Then sales, they have a 15-day return policy for all the online customers, and they get around 10 to 12% of sales in the form of returns, and damages are only incurred to 2 to 3% of sales. So 10 to 12% sales returns. All right. Then their express delivery model. So they have 12,000 different stock keeping units. We discussed that. And this is their average order to delivered. I'm not sure, but I think this means how many orders they've delivered. So 2,000 in fiscal 21, dipped to 1,081 fiscal year 22, 49,000 in fiscal year 23, 5.48 lakhs, then 8.5 lakhs alone in fiscal year 25, and in the first half of fiscal year 26 already delivered 6.3 like 3 lakh orders. 3 lakh orders. Then diversified revenue. Here we will have the revenue category wise. Okay, we're gonna focus on, so these are the categories. Okay, crockery, we got makeup, skin and hair care, lingerie and accessories, health and wellness, clothing, fragrance. Let's focus on the first half of fiscal year 26, and you can pause and of course see, but we will focus on the first half of fiscal year 26. Notice makeup, I believe this is makeup, right? Is it makeup or it's fragrance? Okay, makeup, I think, makes up 25% of revenues. This is makeup. Then crockery makes up 18% of revenue. Clothing, you can see clothing, dark pink, sorry, purple is 11% of revenue. Then we have other, I think that skin and hair care is 16% of revenues, and health and wellness is 14% of revenues. Main point is, you can see different of the categories. Makeup is the most important, but you have a variety of categories. You have clothing, you have crockeries. So they have variety of products, with many of the products being substantial for the company's revenues. And you can see in previous years, they had a lot of reliance or a lot of the money coming from one category. I think this is makeup. This the colors, I think so they match. I'm hoping it's makeup. Okay. So a lot of money came from makeup, which is not a bad thing. Makeup is a big market, but they seem to have diversified. Crockery wasn't a thing in earlier years, and now it's a thing, big thing right now. Crockery. Then revenue bifurcation or basis of brands. In the first half fiscal year 26, 36% of revenue came from their own brands, with the remaining 64% coming from OEMs or original equipment manufacturers. Homegrown brand portfolio. Cider Jewels, Wonder Curve, Blue X, which is crockery, Healy. So these are their own homegrown brands, own brands. I think the main thing we can take from here is that the number of them, eight, and they are across different categories. So one is jewelry, this one is crockery, this one is loungewear, this is hair accessories, this is footwear, and I think this one is, what is this? Fragrances. This is lingerie. So different types of brands, I think across almost all of the business segments. So yeah, diversified number of own brands. And strong omni-channel model. Now, omni-channel means you can sell through offline, you can sell through online, but online and offline, wherever you sell your products to customers, they should have a same kind of their experience. So they have around three Womancart Lux stores. They have three Womancart stores. An average area of stores is 500 square feet. And where are their stores located? It's all in New Delhi. All of the stores are in New Delhi. Whether it can be their Womancart stores, it can be Blue X, which is I think the crockery thing. Even that is in Delhi. It's all in Delhi. Moving on. Now, Womancart is expanding through their own franchise model. Okay, they're inviting franchise partners. All right, investments of 55 to 70 lakhs required for a store. 400 to 600 square feet is the average area, and 70 to 80% return on investment in the first few years. Maybe it's not specified, but they're trying to invite more and more franchise partners. And if they succeed, this is kind of a good thing because franchise model means less capex heavy, less money is required for expansion. So it's going to be a, well, let's say, a better, cheaper way of expansion, basically. Yeah, cheap, fast way to expansion, franchising. Then we have marquee brands, includes L'Oreal, we got Sugar, we got Lakme, Pampers, what else? Parker, some of their marquee brands, not their own brand, of course, but some of the brands whose products they sell, like Gillette, and many more recognizable brands. And finally, the last thing, what is the roadmap ahead? The future roadmap. Okay, roadmap ahead. So first, Womancart Lux stores aim to expand its exclusive offerings. Okay, so they're offline stores. They're trying to expand more and more product, expand to more and more products. Then they're launching super fast delivery in other cities. That's good. Then they're focusing on own home brands to strengthen the margins. Okay, so implication implication I'm taking from this is that the own home brands have higher margins, they're more profitable. All right, and they're expanding beyond the Delhi NCR and Jaipur region to deliver quick commerce convenience across more cities. All right, so geographical expansion, own home brands, again geographical expansion through a fast delivery model. So e-commerce is a big focus for them, and having more and more products. So let's see, that is Womancart, very small company, very profitable, and growing more and more profitable, fast growth, but it is small. Let us see how it does in the future.